The Great Depression was a period of severe economic downturn that changed the world. But what exactly was it, and how did it happen? Let's find out. The Great Depression remains one of the most important economic events in modern history, shaping government policy and economic understanding for generations. The Great Depression was the deepest and longest-lasting economic downturn in the history of the Western industrialized world. It began in 1929 and lasted until the late 1930s, crippling the economies of virtually every industrialized country worldwide. The Depression didn't have a single cause. It resulted from a perfect storm of underlying economic vulnerabilities and specific triggering events. The most famous trigger was the stock market crash of October 1929, known as Black Tuesday, which saw stock prices collapse and panic set in. Following the crash, widespread banking failures occurred as people rushed to withdraw their deposits, leading to a loss of trust in the financial system. Overproduction in factories and agriculture, coupled with stagnant wages and reduced consumer demand, meant unsold goods piled up, forcing businesses to cut production and lay off workers. Protectionist policies, such as the infamous Smoot-Hawley Tariff Act, worsened the crisis by stifling international trade and triggering retaliatory tariffs globally. For ordinary people, the Great Depression was a period of intense hardship, uncertainty, and struggle. Mass unemployment reached devastating levels, with millions losing their jobs. Poverty skyrocketed, leading to homelessness and the creation of shantytowns known as Hooverville. In the Midwest, a severe drought exacerbated the crisis, creating the Dust Bowl, forcing thousands of farm families to abandon their homes and migrate west. Beyond the financial pain, the Depression caused immense social and psychological stress, impacting family life and individual well-being. As the crisis deepened, the government was compelled to take unprecedented measures to stabilize the economy and aid the suffering population. Initially, President Herbert Hoover took limited actions, believing in self-reliance and voluntary cooperation, which proved insufficient against the scale of the crisis. Franklin D. Roosevelt, upon election, launched the New Deal, a series of experimental programs aimed at relief, recovery, and reform. Key initiatives like the Civilian Conservation Corps Social Security Act and the Tennessee Valley Authority provided jobs, financial security, and modernized infrastructure. While the New Deal eased suffering, it did not fully end the Depression. That would take a massive global effort. The massive scale of government spending and industrial production, spurred by World War II, finally kick-started the economy out of the decade-long slump. The Great Depression fundamentally reshaped the role of government in the economy, establishing social safety nets and financial regulations still crucial today. The story of the Great Depression is a stark reminder of economic fragility and the importance of timely government intervention. From Black Tuesday to the New Deal, this era defines the transition to a modern, regulated global economy.